Hello, everyone. This is Socrates and Tyler with Lucid Investment here to bring you the daily update on our view of the markets. The action has sure been sweet over the last 24 hours or so. Every market that we like following has been moving, and it's been moving in a big way in some situations. So today we're going to be taking a look at the S&P 500, at gold, as well as Bitcoin. And as many may know, gold has been making a huge move today, and Bitcoin has just started to make a move itself. Just had a big close on the 4-hour chart. Closed above 9,500. So we will be finishing up with that, and we will start out with Tyler and his look at the interest rates.
Great. Thank you very much, Socrates. Great introduction. We're kind of calling this a pressure cooker. There's all kinds of metaphors we can be using, but I've never seen so many forces coming together at the same point in time, affecting almost all markets. And they're not affecting it in ways that you would expect. A lot of this is very counterintuitive. So I just want to start with a kind of a broader view of the macroeconomic picture, which is what I am terming a pressure cooker right now. Everyone is talking about parts of it. They're talking about the crypto market, or talking about the interest rates that have been dropping like rocks. They're talking about gold making this potentially breakout move. They're talking about the US stock market going back to new highs today in a couple of the indexes. If you had to lay it all out and try to figure out, if this moves this way, shouldn't that move this way? In a pressure cooker, the pressure starts building and building and building to the point that unless you release the pressure, the whole thing just explodes. And as you know, one of the things that Leah and I have been talking about for a year and a half is the heat that is building up all the pressure is debt. And we're not going to go into that today, but I just would like everybody to focus on the fact that all the central banks, all of the big banks, all of the corporations trying to either lend money or sell their bonds, clear across the spectrum, understand what is going on here, but no one seems to have a solution. And so instead of people making policies that can solve the problem, the markets themselves are moving in ways to try to alleviate or take advantage of the forces. Now that sounds, kind of academic and all of that sort of stuff. It is not. It's very simple. Mario Draghi has been the president of the European Central Bank, kind of like the chairman of the Fed, since 2011. So for 8 years. Prior to that was Jean-Claude Trichet. Now, Mario Draghi is an Italian economist with impeccable credentials. Jean-Claude Trichet is a French economist who was the head of the European Central Bank from 2003 to 2011. So basically, two individuals from 2003 up through this afternoon have been in charge of the central bank of all the European Union, including the UK, but that's now up for grabs because individual countries have been fighting what has been happening in the EU. So that's causing tremendous pressure. And one of the things that Mario Draghi has been saying is he's going to cut rates further. So today, the former president Jean-Claude Trichet was on CNBC in just a brilliant interview and very important, in which basically he said he does not believe that there's any ammunition left in the EU to stimulate further. So you've got the former president of the union, the central bank of the union, and the current one saying 180-degree opposite things. Now, in the midst of all that, one of the great economists, strategists on interest rates was also on CNBC questioning Mario Draghi and basically saying, you guys have screwed this up so badly that there's no way out of it. Now, he wasn't talking just about the European central banks. He was talking about all central banks combined. And finally, my interpretation of what Jean-Claude Trichet said was, well, unfortunately, I think you're right. Now, what does that mean? Today, believe it or not, this afternoon, around the world, we have the lowest interest rates in 5,000 years. And I'm going to pull up a chart of the 10-year US Treasury bond yield. You've seen our charts if you've watched us before of the largest hyperwave we've ever seen, which was an 80-year hyperwave, the first 40 years of which interest rates kept climbing, and the last 40 years they've been falling. And one of the concepts behind hyperwave, and I know we're taking a lot of flack from those people that think hyperwave only applies to Bitcoin and it's failed in some way because it only predicted a drop from 20,000 down to 3,000, where originally we had said 1,000, and I'm still firmly of the belief that 1,000 is on the table unless 20,000 is taken out. We're not talking about the Bitcoin hyperwave today. We're talking about hyperwaves in general, the hundreds and hundreds and hundreds of them, including the largest one ever, which correctly predicted the giant run up for 40 years and the fall all the way back down to the beginning. But what's important about hyperwaves is they occur when there are massive macroeconomic shifts taking place. And the reason hyperwave is an important concept today relative to this pressure cooker discussion we're having is because we're finding hyperwaves across the board in currencies, in commodities, in interest rates, in stock markets, in the precious metals markets, and in many, many individual components of each of those things. So forget hyperwave as the topic, other than to remember that our perspective at Lucid Investment Strategies is these things occur in great numbers when massive tectonic economic shifts are underway. So the question on the table today for Socrates and myself, after looking at these wild moves in the last number of months, down to the last number of weeks, down to the last number of hours, is, are we running out of time? Is that's what these markets are telling us? Will the decisions for policy makers be forced on them before they can come up with the right solution? And we don't have an answer for that, but that's the topic we're going to discuss today. So the first thing I want to do is just pull up a chart, which I think is the most important chart for this discussion, even though we haven't really talked about it in much detail in past vlogs. because we've focused on the long-term 30-year or the 20-year yields on interest rates. This is the 10-year. One of the reasons the 10-year is so important is because it's really the 10-year, and it's either 30-day or 3-month or 2-year counterpart that is important when you talk about yield inversions. But I'd like you to look at this chart as of today. This is a monthly chart, and you will notice we are on a red 7. What this is doing is, as yields go down, these bars go down. As yields go up, these bars go up. When the bars are going down, that means bond prices are going up. When the yield is going up, that means bond prices are going down. And for the last 1, 2, 3, 4, 5, 6, 7, 8, 9 months, we've seen a precipitous drop in interest rates as measured by the 10-year bond yield. But more importantly, in about less than 2 weeks, this bar is going to close. Right now, it is below the setup trend line that was established as we were going up. And after this 9 coming down, and it looks like that is going to be broken. More importantly to me, if I take the price off, just for a second, you will see that we are in a full bearish mode in Consensio on a monthly basis on interest rates. We just had a cut or a break of the long-term 30-month moving average with the shorter 7-month moving average, and notice that just 2 months ago the long-term moving average turned down. So now we are in a perfect bear market for interest rates on the 10-year bond. Now, the reason I wanted to bring this chart up is what the implications of that are for our discussion. When rates are dropping like this, it either means that all the central banks are cutting interest rates, or it means the economy is slowing down faster than central banks are able to keep up with it. But that doesn't make any sense. Why? Because this morning the S&P 500 hit all new highs, lifetime highs, saying that the US economy is strong, not weak. We know that the Fed is no longer increasing interest rates, and they have not begun decreasing interest rates. So what is this thing telling us? Well, it's important to note that there are $12 trillion of negative interest rates around the world today. Almost 1 in 4 currencies, sovereign currencies, are designated with negative interest rates to the tune of $12 trillion, which means that those with negative interest rates cannot cut those rates to stimulate their economy. And what we're seeing, even in the United States, with a very strong economy, a very strong stock market, are rates that are plummeting. Now I'm going to go from the monthly chart to the weekly chart, and you can see what I mean by plummeting. Just back here in October of last year, we were at 3.3%. This morning, we dropped below 2% to 1.975%. So they are falling like a rock. And also notice on the weekly, fully bearish according to Consensio. Okay, I'm going to go off screen share. So we can try to put all of this together. I suggested in an article that Leah and I wrote called The Long and Winding Road to $10 Million Bitcoin that there's 4 or 5 solutions to relieve the pressure on the financial system. And we're not going to go into all of that other than to say those 5 things were Bitcoin, gold, default on the debt, or a strong U.S. stock market and economy that could help us grow out of the debt problem. We had a 5th potential example, which now Libra has pulled out from underneath us before I had a chance to write about it, which had to do with the Chinese program to come up with a new currency based on commodities, other currencies, and particularly gold, and away from the old standard of just the US dollar and gold. And they have made inroads to getting a number of countries to accept that premise so that they're moving away from the dollar. So we're not going to go into the weeds on those 5 things other than to note that what Socrates and I will be talking about today are parts of those 5 solutions. We're going to look at Bitcoin, we're going to look at gold, and we're going to look at the stock market. The 3 things that if the powers that be decided on a policy position, they possibly could front run this pressure cooker blowing apart. And to do that, I'm going to turn it over to Socrates to bring up some charts on the stock market first, because something does not fit here. How can you have one stock market in the world, the US market, hitting new highs while all of this other stuff is going? And I'm not going to make the linkage now. Everybody's got to think about themselves. There is no answer to the questions I'm posing. What we're doing is we're identifying the probable causes of the pressure building up in the worldwide macroeconomic structure so that certain asset classes are beginning to act in unprecedented ways. And with that, I'm going to turn it over to Socrates.
All right. I am pulling up a chart now. Let's see here. Okay. No. All right. And Bitcoin is now testing 9,600. Briefly got through it and is now slightly below. Will be interesting to see what happens there. And in the meantime, go ahead and take a look at the S&P 500. Here is today's candle that just closed, and that is a very interesting candle indeed, which is taking us back up to, as Tyler mentioned, all-time high levels. So we're seeing that. I'm trying to see if it closed there or not. The high here was 29.54.13. Close here 29.54.18. So by 5 cents, we closed above this peak.
Unbelievable.
And that is very interesting to me. That is definitely showing bulls being in control. So let's take a look at the weekly chart here really quick. If it will load for me. There we go. So we might remember from last week, keeping our eye on the weekly parabolic SAR. Went on a bit of a tangent on how important that is to me and how powerful of an indicator it can be. And it said that that would be a buy signal that would be one that I would probably have difficulty passing on. And sure enough, the price went right through it. And of course, I did pass on that buy signal. I was aware when it was happening and was more interested in putting my money to work in some other areas. So I did pass on that, but really not for any reason having to do with this chart or this market. So now we will be watching very closely for this weekly close to see if it can as well close above this peak that we got in April. If it does, then that would be a very significant sign to me of a continuation coming. And the other thing that I would look at is this potential sort of cup and handle looking pattern where it's more of less of a cup and more of like a triangle, more of an atom sort of formation, if you're familiar with the Adam and Eve pattern. But the principle is still there for me. You've got a deep drop, huge support. This is almost, maybe in my mind, even a little more bullish than a traditional cup and handle, which has the rounding bottom. This shows huge support came in down here. And that's a more bullish move to me than a rounded sort of cup. So now the handle was kind of the same situation where it was this deep spike down and didn't have the rounded action that you would expect to see. But again, it's still the same principle of what a cup and handle is. A cup and handle is really, a big correction, good support, and then a higher low. And that's just basically the same thing that I'm seeing here. We've got a big correction, horizontal resistance, and then a higher low. And now it looks like it is trying to confirm, and that would be a massive measured move if you were to use that to provide a target. That is $600. Is that right? 23 to 20. Yep. So that would be about 35.50, 35.40 would be the target if you are to use this sort of spiky type of V type of cup and handle in order to measure a move. So that is what I'm seeing, and I'm very, very intrigued by today's close, and we'll be watching very closely to see where this candle closes. I guess one other thing I could take a look at is the ADX. That can be a really good indicator when you are waiting for confirmation. And we've been stuck in this range. Getting the ADX to cross 20 would be a very interesting buy signal on the weekly, and it likely would not get, it would get a less desirable price for the most part. Generally, the price would rally significantly for that to happen, but it would be good confirmation that this is actually a trend and that we're not still stuck in this range, which we have been for so long. So we do see that the plus DI crossed the negative DI just recently, about 2 weeks ago, but that doesn't signal anything. As long as this ADX is below 20, it's saying that there's a trendless market, which basically means these can be disregarded. One thing I will keep an eye on is for these to spread out, showing significantly more buying pressure than selling pressure at these prices. Take a quick look at the daily, see what it's showing, and We are seeing this start to spread just these last couple days, getting significant buying pressure. Selling pressure is dwindling, but the ADX just crossed 20, which is very interesting. That is actually pretty surprising to me, seeing this telling us a bull trend, and then it continues moving up, and yet the ADX pulls back down below 20, saying that no, this is not a bull trend. And if it was, this would have found support and rolled up at 20. So that's very interesting to me. I would not expect to see this fall below 20. So that's definitely something else I'll be keeping my eye on. What are you looking at, Tyler?
Yeah, let me just quickly pull up a chart here of the S&P. I will bring this one up. Because just as Socrates said that his indicators are such that this would be something he would be interested in being in, as you all know that have been listening to us, we've been 50% invested on this downtrend in the S&P, and we're waiting for confirmation to put the other 50% in. This action is what I was looking for to do just that. But I need a weekly close, and that doesn't come for another 23 hours, 23 and a half hours at 4 o'clock tomorrow. But all the orders are written, and I'm ready to do that purely on a technical basis, because the fundamentals behind what is going on here to me are nonsensical, which is why I call this a pressure cooker. That when pressure is relieved in a thing called tectonics, which is mountain building, it's the plates coming together in such a way that huge amounts of pressure are built up. And the only way to relieve that pressure is for one of the plates to slip from the grasp of the other one in a violent move, which is what causes earthquakes. But more importantly, the one on top is pushed higher, and that's where mountains come from. The best example are the Himalayas, with plates that are pushing up from below India, and that are pushing all of that land up into what we know as the Himalayas. The same thing is true with all the big mountain ranges. You can't predict what it's going to do, what it's going to look like, when it's going to happen, the amount of damage that is done when you get these tectonic shifts. The same thing is true in the financial markets. All we're doing today is saying, I think we all need to wake up and understand that these tremendous moves we're seeing in the crypto markets, I don't mean just in the last 5 months, I mean for the last 10 years. The tremendous moves we've seen in equity markets, not for the last 6 months, but for the last 10 years, and the tremendous shifts we saw in the equity markets in the 10 years previous to that. Huge moves up, huge moves down. The move of gold from $265 up to $1,900, and then back down all the way to $1,100 before this recent push to 5-year highs today. All of these things are demonstrative of the pressure building and building and building, because fiat dollars are being printed at unreasonably high levels without any offsetting reserves or liabilities against them. And that gets translated into what should be inflationary pressure because you're printing more dollars or more yen or more yuan or renminbi or euros, then the growth rates of those entities can absorb. And what that means is weird things begin to happen. Now, I said that there's $12 trillion today in negative interest rates. And the example used this morning was, if you give to a bank or a government money for 10 years in a 10-year bond with negative rates, what that means is you will get back less money than you gave them 10 years from now. And the 6 countries with negative rates, the lowest rates in the world, are surprising. They are Switzerland, Denmark, Sweden, Japan, Israel, and Germany. You wouldn't think of those as some ne'er-do-well developing country with horrible policies and potential hyperinflation. Turkey and Argentina and Venezuela and Zimbabwe all come to mind when you think of, here's where the problems are. That's not what we're seeing today. We're seeing the current president of the European Central Bank say, don't worry, don't worry, don't worry. We've got all kinds of tools where we can continue to lower interest rates. And the president of the same bank who ran that bank for 8 years saying, no way is that true. It was Jim Grant that was on CNBC, for those of you that follow him and his interest rate newsletter, that was questioning Mario Draghi, Jean-Claude Trichet this morning. And if you can download it, I think you'll find it fascinating. Okay, so now we're looking at what to Socrates and to myself looks like the breakout of the most important stock index in the world that has as its member constituents some of the most important companies in the world. Now, purely on a technical basis, you have to jump all over this. But something's wrong here. And could we be just seeing another small peak like we've done for the last 18 months before things come apart again? Absolutely. A lot of the technicals are looking really good, but just as technicals are simply a way of measuring the underlying fundamentals, something is wrong here. That doesn't mean you don't go along with it until it proves that it is wrong. But the way I'm looking at these markets, meaning the US stock markets, I'll pull up the Dow Jones Industrials. Also a huge move. It had been lagging greatly. This peak did not take out the former peak, but we just did today our high was 26,798, and the high on this negative candle was 26,349, and the high on this green candle was 26,211. Therefore, this action so far this week has gone up to 26,248 with just 1 day left on it. The NASDAQ is lagging the S&P. The NASDAQ 100 is lagging, has not gone to new highs. So as a package, there are things to be cautious about. But fundamentally, you've got to look at this and say, if this were to run to what the targets are saying, for example, on the S&P up to 33 to 3,500, remember the inverse head and shoulders that we had with the 3,300 target. Now this, what looks like a great cup and handle, or the way Socrates explained it, more like two triangles. The same forces are at work. Now, we did break briefly through the head and shoulders that was drawn on a number of these indexes, but then it failed. So it's too early to get really excited. And some of the longer term technical indicators, such as the ADX, and when you look at the Copic curve on a weekly basis on the S&P, it is still coming down from above the 20 level. On the longer terms, like the monthly, it's staggering, trying to turn up, but it has not done that. That doesn't mean that from a trading perspective, a portfolio management perspective, you wouldn't be very interested in the action that's taking place in the US stock market. This is not occurring in markets around the world, which is an important distinction. And we will spend a lot of time looking at that, but not today. So with that, I am going to stop screen sharing again, and we are going to take a look at the gold market, and I'll ask Socrates, who has been all over the bullish side of gold, predicting that it would break above that 1,380 level, which was kind of a very important level for me. And we got all the way up to 1394 or 5 today. We don't have a weekly close yet, but I'm going to let Socrates pull up his charts, and I'll take a look at it too.
All right, sounds good. And before that, one thing that I found interesting, and there was a good question in chat asking, when is a broadening top invalidated? And I thought we could just cover that real quickly. For those that did not catch the vlogs that we did on the Selgin trading system, feel free to go back and look at those. We do cover the stop loss and the broadening top pattern pretty well in depth, and that can help you to understand when it is invalidated. And right now it looks like it is going to be this week. It's a little too early to say that, but it's pretty convincing right now. So we start with drawing the stop one interval above this peak. The intervals are shown with these boxes, rectangles that are superimposed on the chart. So starts there and is extended 5 weeks, including this candle. So 1, 2, 3, 4, 5. That is where the stop loss was for the first 5 weeks, and now it starts trailing by 1 interval per week. So last week it was right here. Broadening top was still very much in play. This week it got trailed down to about 29.23, and the stop losses do wait for closes, so this hasn't been taken out yet. If it does close above this area of 29.23, then that would invalidate the broadening top and would initiate a stop loss for any short positions that were executed. Would have been right here, was the entry signal. So that would be something else to keep an eye on, that even if you aren't necessarily in a trade or worried about the broadening top, that's just another confirmation that the bearishness is being overwhelmed by the bulls. Seeing another short stop loss taken out would be very interesting for sure. So now let's go ahead and take a look at gold. I sure thought I had something, so we're just going to go back here. I have been paying very close attention to gold. It is one of my absolute favorite assets along with Bitcoin. So I have been kind of expecting this and very much hoping for it, because I do have a lot of my net worth is exposed to this market. So today is a good day for the gold bugs who have been going crazy in this action. This has been so frustrating every time we've come up here and tested this and then gotten shot back down. Oh, it's just been so frustrating. But now it looks like we could be confirming some major patterns that we covered a week or two ago on the podcast. And first one is this ascending triangle, which is massive. And it's not necessarily perfect because this one doesn't come down and make a touch point, but I do count it because it's higher lows. We've got higher low, higher low, higher low, horizontal resistance. To me, that's an ascending triangle. So let's see what that measured move will be. If this does close above, I would give it a measured move, a target of 1685 based on this formation here. Outside of that, we also have this cup and handle, something like, it's pretty apparent here. And then we get the handle here, and we're going to take a look at its measured move. Okay. And this is something that may seem a little bit redundant, seeing multiple bullish patterns, but it's not at all in my mind. I love seeing a price paint multiple bullish patterns as it's trying to break through a major area of resistance. That just shows pressure really being built up and one side continually winning the battle is what I see. So this one's really important to me. This target from the cup and handle, we're at 1522, which is in line with this horizontal or so, pretty darn close. And I believe that there's also a fib there. So let's take a quick look. No, I was mistaken about that. There's this is kind of right in between two fibs. So that will be definitely still an important target because of this area of horizontal right there at the 1524 or so. And then the other bullish pattern that was identified was this bull flag. And I mentioned how the ideal cup and handle, according to Thomas Bulkowski, won't really have a handle. It will have more of a bull flag that's high and tight. That will lead to the best performing cup and handles, according to Thomas Bulkowski. His site's thepatternSite.com. Tremendous resource if you've never been there before. So we've got three bullish patterns painting one inside of another. We went over this a couple weeks ago, and I was very intrigued by seeing the bull flag, the cup and handle with the high and tight handle, and then the ascending triangle. This one has a target of 1414. So seeing multiple bullish patterns is something that I was paying very close attention to, and now we are making this move today that could basically be confirming all of them. A little late on the bull flag. That one confirmed a little while ago, but essentially this cup and handle wasn't going to be confirmed until a close above, I'd say 1360 was the number I was looking at. And it looks like we're going to get that today. I believe we've got about an hour and 15 minutes before the close. And if that happens, and that would signal a long entry based on this cup and handle formation. I did mention that I passed up on the S&P entry primarily because I had other places that I felt more confident in to put my money, and this is a prime example. So the S&P right now is looking like it can continue on and create higher highs and have a big move thereafter, but I'm not near as confident in that as I am gold because we're seeing all of these bullish patterns. You could label this an inverse head and shoulder with like 18 shoulders across the board here. So all of these patterns occurring after the price is consolidated in a range for a very long period of time, call it 6 years or so. To me, I'm much more interested in this chart than the S&P, even though the S&P is very interesting in its own right. If we can get this daily close above 1360 and then confirm that with a weekly close above 1375 would just be huge. There I would be very confident in putting money to work, and that confidence interval is what leads me to allocate money in different places based on my confidence. So right now, gold and Bitcoin are the two that are intriguing me the most, despite the stock market showing some very bullish signs. So that is what I'm looking at on gold from a technical perspective. What are you seeing, Tyler?
I will pull up a gold chart also. Take a little bit longer look because of the implications of what this thing is saying. Remember, what we have been talking about is, and it's very important for those of you that are trying to understand how the cryptocurrencies fit into the bigger picture. I don't mean just from a trading point of view. I mean in terms of macroeconomics. And the best work, I believe, to date on that is Saifedean Ammous's book, The Bitcoin Standard, simply because the first 3/4 of it, he's talking about gold and the gold standard, and gives you a historical perspective of why so many individuals and countries have relied on the precious metals for thousands of years. And now all of a sudden we've got this new player on the block. And you can't dismiss, I believe, the importance of the relationship between the gold market and the crypto market, not in terms of price appreciation or anything like that, but in terms of the importance to the big picture. So let me pull up this longer term picture of gold. This is a monthly going all the way back to 1998. And just remind those of you that haven't been following it for that long of a period, even though you've looked at charts of gold and all the exciting stuff that happened back in the 1970s, what I'd like you to just consider for a second is the highest gold had ever been in history was $880, just a little bit above this level, going back 5,000 years. Remember, I said earlier that interest rates today are the lowest they have been in the history of civilization, but certainly going back 5,000 years, in which there was a thing called interest rates, and usury laws began to develop. And when somebody lent something to someone else, they would want that same thing back plus something on top of it. And gold and silver played a big part of all of that. But starting back here in 1998, we had dropped all the way down to $250 on gold. And that was during a period of time in which interest rates peaked at exactly the same point that gold and silver peaked in 1979 and 1980. And interest rates had fallen all the way down to here at the beginning of 2000 and went to zero under the chairman of the Fed, Alan Greenspan. But then gold did this. It had been dropping from 1979 all the way to the beginning of the 2000s. And then as interest rates continued to drop, as I showed on the first chart, this is what gold did. It went from $250 to $1,900. 2.25 times its all-time high. Before starting, and that peaked in 2011, so we've now been in an 8-year bear market in gold. And what have interest rates been doing over the last 8 years? In the United States, they've been slowly increasing. But now we're getting a breakout of gold at a time in which it looks like the Fed in the US is going to start cutting interest rates again. So what's important about this discussion is not taking any period of time in the past and doing a correlation between asset classes. Because I'm telling you, from the 40 years of experience I've got, looking at separate asset classes in relation to other asset classes, what the picture is being painted here is total confusion in the marketplaces. And the problem with that is it makes it difficult not only for money managers and investors, but for bankers and central bankers and policymakers across the world to come up with any explanation of what steps they need to take to right the ship. So my looking at this gold chart on a long-term time frame shows that we are in a hyperwave-ish situation in which we broke down from the most accelerated part of that and attempted to hold, broke down again, and haven't yet come down to the longer term, what I would call a phase 2 angle. Now, depending on how you draw it, and if you're looking at gold or you're looking at the GDX or the GLDs or gold prices, you get a lot of different readings. Also, if you take a look at long-term silver, you don't get the same relationships that you've had for the last couple hundred years. Gold is breaking out to the upside, and silver is nowhere near doing that. In fact, is closer to the bottoms than the tops. In other words, something is going on even within the precious metals market that we haven't seen before. The same thing is true if you look at the gold mining shares. These are the gold mining shares that, yes, they were up today, and they have taken out the descending stop and reverse points a number of months ago, but are nowhere near the highs that are being challenged by gold itself. Normally, the gold mining shares have a volatility or a beta relationship that is greater than that of gold. When gold is going up, they go up more. When gold is going down, they go down more. Here, we had the mining shares drop more, which you could check off your checklist, but then didn't go up as much, and then dropped a lot more and are struggling to go up like gold. So not only silver, now platinum and palladium are doing some different things. Palladium is on fire again, as opposed to what we looked at with platinum and palladium earlier relative to gold. Palladium is on fire, had a huge spike back up close to 1500. Platinum is basically doing something very different. So my story here is that things, asset classes, industries, interest relationships are all in a chaotic state, which tells me that our pressure cooker analogy or metaphor is very valid, and that means be very, very careful about making assumptions. I would have to agree with everything that Socrates says about gold, but I'm talking about gold, and I'm talking about bullion. I'm not talking about all the spin-offs and derivatives and correlatives that go along with it. Just GLD, the XAUs, and bullion. Now, that doesn't mean that if they break out, meaning gold and gold bullion, again, I've got orders written on the close for tomorrow, depending on where it closes, to start getting back in a big way into the gold market. But I am very cautious taking money out of cash in these kind of volatile markets. And so I need confirmation across a number of different indicators, many of which Socrates just went over. And so with that, unless Socrates has got some more points about gold and precious metals. I think you're muted, Socrates.
I sure was. I've got nothing to add. You covered it very well.
Okay, let's get to the fun stuff. What the heck is going on with Bitcoin and the cryptos?
Yes, that is the fun stuff indeed. And I might be ready to show some charts here. Okay. And taking a look at Bitcoin. So at the top of the air, I mentioned that we had a very important close, and it's actually two very important closes that we've had today on the 4-hour chart. The first one came right here. This was very important to me because look at how it was the highest close out of any of this action. We'd been trapped below 93.40 and had been wicking above, but had not had one close above and had been coming back off of it rather sharply, but forming higher lows. So when this closed above 93.40 right here, I made a tweet showing this ascending triangle, which has a measured move of nearly almost up to 10,000. Let's see here at about 98.97 is the move based on that ascending triangle. Some may view that as a bull flag and use this to measure the move. I took the conservative option and went with the ascending triangle. And for people who may remember, I was targeting 9,600 as my area to profit take from my long that was opened in the 75 to 8 area. And that is based on this horizontal right here. So that was going to be my target, and I am not planning on taking profit there any longer. And the reason being is because we consolidated into a bullish formation right below that area. So when we get very close to a prior area of resistance, we don't get there, and instead we consolidate into a bullish pattern. That's something that I pay very close attention to and will adjust my profit target based on the target provided from the pattern. So I didn't take profit here, and that was worrying me as we're consolidating in here. I'm trying to figure out if I should now take profit in here or if I should wait for further development. So what I did, if anybody remembers, is I moved 50% of the stop loss to right below here. 8,800 was my key area of horizontal support. If that broke down even for a second, I wanted to be taking profit. So 50% of my stop loss was moved to right under 88, maybe it was 87, 74, something like that. And the other 50% was moved to break even. My average cost basis was around in here. So I moved that to break even. That ensures that this would be a profitable trade. If it breaks down, I'll get a little profit here. This will break even here. And it allows me to go ahead and adjust my original target how I want and use this ascending triangle instead. So that is how I am going to be moving forward, is I will be trailing my stop losses, and the one that I have at break even now will get trailed after this breakthrough, and this one will probably stay where it is. It might move up just a little bit. So something else to point out would be the candle that confirmed my ascending triangle right here. Look at what the TD is showing. It's showing a perfected green 9 with a combo 13 and an aggressive 13. Very, very rare that you'll get two 13s and a perfected 9 at the same time, at the same candle. So this is a very important situation where you need to have a clear-cut hierarchy of indicators so that you know what is most important when there is different when different indicators are telling you different things. You need to have a clear-cut hierarchy so that you know what to trust. Here, if the TD sequential is at the top of your hierarchy, then this would be a huge sell signal. And even Tone Vays does not have the TD sequential at the top of his hierarchy. He has a handful of things above it. So that's something to be very aware of and to start getting a feel for yourself. So when we get this candle right here, you know how to proceed instead of just being really confused. So for me, one of my most important indicators is simply horizontal areas of support and resistance. And patterns are also very important to me, both of which are more important to me than the TD sequential. So right here, this candle closing above horizontal resistance was a very strong indicator to me that we should get continuation and not even have a 1 to 4 candle correction. If we got a 1 to 4 candle correction after this close above the horizontal and confirming the ascending triangle, then that would basically turn this into a big bull trap, fake breakout, and would make this very much in danger of breaking down to the downside. So even though we have an aggressive 13, a combo 13, and a perfect green 9, I wasn't even wanting a 1 candle correction because you want this boundary line to stay either act as support or for the price to stay above it. After a pattern confirms, you do not want the price to retrace back to the middle of that range, of that trading range. If that happens, then you are looking at a high probability of a trap. And because of that, you can use that area as a stop loss. This is something that it can be a good stop loss because if it does retrace back here, it's highly likely that this was a fake breakout, and it also provides a very good risk reward. So right here, when this closed above, that signaled a long entry based on this ascending triangle. And if that was taken, I didn't take it because I'm already fully positioned. I'm not feeling the need to add here. There are some other things that I'm looking at, but basically, if you did enter here about 93.87, then the stop loss would be right here at about 92.57. I think that's about a 3-to-1 risk reward ratio. So yeah, that is going to be a pretty good setup, and one that I would absolutely be interested in if I was not already entered into this market. And the next thing that I would look at potentially is I always like to enter in portions. So instead of entering everything here, maybe only enter 25 to 50%. And then I would wait for this 9 to get taken out as a confirmation to add. Taking out this 9 would be a very strong indicator to me and could be a situation to add. And then also a green 2 above a green 1 could get me fully entered right in here. Right here, I would probably shy away since that is a horizontal area of resistance. I would prefer to see a breakthrough and a throwback to buy that price instead of buying it while it is still postured as resistance. So that's what I'm looking at on Bitcoin. Just a couple other charts to pull up very quickly. The Litecoin pair is very interesting to me right now. I'm talking Litecoin USD. And we take a look at, notice how well it has been finding support from this 50 EMA on the 4-hour chart. We're looking back in here, here, here. Anytime price gets down here, we're seeing wicks and we're seeing strong bounces. Just what I like to see. And then we notice how when that breaks down, price has been staying above the 200. It hasn't quite been returning to the 200, which tells me maybe I should adjust that down to maybe the 190 or so. I would like this moving average to be catching these. But I do like seeing price support above there after breaking down the 50. So now what are we looking at here? Some very interesting action, in my opinion. So we have been consolidating. We know we've got the it will be having coming up here in August. So this is the time where I'm wanting to be buying the hype so that I'm in a good position to sell the news. And anytime we're getting significant corrections or consolidations over the next couple of weeks, I'm very interested in adding to my exposure. And right here is a situation where I think I will be very shortly after concluding today's episode, and I will tell you why. So we have this trend line, which makes up a bit of a symmetrical triangle, which the price has been consolidating in. We had lower high and higher low. Now we've got, it's not quite created a higher high, but we've got this higher low, significantly higher than this low, and now this kind of double top. That tells me that the bulls are starting to take over because we got higher low, and instead of getting another lower high in here, we have rallied through and basically retested that area at 140. It held as resistance, and now it looks like we're creating yet another higher low, which right here is where I'm very intrigued about entering. And those that have been following along probably recognize this action right here, seeing support from the 50 EMA and then a close above the 9 is where I really like to add or enter into a position. It shows me that my moving average held as support and that now we are back fully bullish posture with the price above the short. Getting that short term to turn back up is also very important. We do see this short term turning back up right now. Price is above, and if it closes above this 9 EMA, that would also close above these prior 3 candles, which we do see is a significant area of horizontal. So that would be my buy signal right there based on the 4-hour chart. First thing that happened is the breakthrough of this trend line, the higher lows, the support from the 50. Now, if we can close above this 9 and above that horizontal, that's going to be all systems go for me. And sometimes when I am seeing an entry that is potentially only hours away, I will look at zooming in and seeing what my indicators are showing there, and can potentially use that to make more precise entries. And that is kind of what I'm seeing here. We notice how we broke down. This is just the 5-minute chart. We got a death cross 50 and 200, stayed below. Now, boom, we smash up. We break through that trend line. This candle pulls back to test it, gets a huge wick, showing a lot of support here. And now we have an incoming golden cross with the 50 and the 200 EMAs. So seeing that the 4-hour chart is on the verge of signaling a strong entry, and then seeing the short-term time frame start to turn around is something that is very good confirmation. I want to see all the time frames lining up. I want to see all trends going in the same direction, and those are going to provide the highest probability positions. And it looks like that could be on the verge of what is happening here. So that is what I am most interested in. Definitely seeing a number of signals. We've got Ethereum breaking through a trend line here after a very prolonged consolidation. So there's things are happening very quickly, and right now the next thing that I will be looking for is on Bitcoin breaking through this 9,600 area. That still is a prior area of horizontal resistance, and it always could hold up regardless of what I expect. So seeing a close above this 96 is not only going to be good for my Bitcoin position, but that will also make me feel better about entering, increasing exposure in the altcoin markets, the alts versus the USD pairs. So that's what I got for you today. What are you looking at, Tyler?
That's terrific stuff, and it's working very, very well on this move. Puts me in a bit of a quandary because I was saying that I was going to take profits on the other half of the 20% that we put into Bitcoin, down around the $6,500 to $6,600 level on average. We sold half of it at 8,800, and I was hoping we could sell some between 9,000 and 9,400. Now we're up to 9,600. We're getting closer and closer to that magic 10,000 mark. I agree with Tone that round numbers work with certain things. They don't work with a lot of other things, and I don't really see much evidence that they work particularly well with cryptocurrencies. Big round numbers. I think many of you have heard me talk about the round numbers 100, 1,000, 10,000, and the next is 100,000 for the Dow Jones Industrial Average. And in each case, the 100 and the 1,000 and the 10,000, they were very, very important areas for often many, many years. The $100 lasted for 13 years. The $1,000 barrier lasted for 17 years. The 10,000 was a funny one because we'd break above it and then go crashing back down, and then back above it and then crashing back down. And then finally we took off and went from 10,000 all the way up to 29,000 approximately. The next big round number that matters for the Dow is 100,000. But in what Socrates was just saying, it just happens that there is resistance at 10,000 to 10,100 and 11,000. But the way this is moving on a short and intermediate term basis, well documented by Socrates and across a number of major cryptos, not just Bitcoin, leads me to believe that there are higher prices coming. And the question is how high. I don't want to let a profit go on an intermediate term move, but if that intermediate term move has the potential to turn into a long-term move, then we want to keep our foot in the door and add to the positions. So we're not doing anything right now on the positions that we have. We're not adding to it. We are not selling what we have. But just as the hair on the back of Socrates' neck is standing up on all these markets, because they're offering huge opportunities and potential huge risks because of the various time frames and the various asset classes that don't seem to be correlating very well. This is something to just be very, very careful about, very, very disciplined about how much you are putting in, at what levels, and where you're putting stops. And very exciting time. So thank you very much, Socrates. That was a great review of the charts. We looked at the gold charts. We looked at the U.S. stock charts. We looked at the Bitcoin charts. They are all acting very well. And some would say they shouldn't be. We looked at interest rates from an overall perspective of the cost of money and the value of money. And it's all tied in together. And I'm glad I'm not a policymaker at a central bank or an economist trying to explain without the knowledge of what all of these things are indicative of, because this is the first time in history that we've seen all these things come together. And with that, I'm going to say goodbye and turn it over to Socrates. Are there any questions that have popped up that you want to cover?
Yeah, before saying goodbye, there is one question that I have for you. At what point would you consider this a long-term trend in Bitcoin?
That's a tough one because Bitcoin moves so fast. Prices today are 1/2 of what they were a year and a half ago. So it's very difficult to talk in terms of what is a long-term move here. I define long-term as months or years. We're certainly into the months category. We're nowhere near the years category. We've got 1.5 years of a bear market right up through today. So the long-term trend until it reverses is still in a down mode. Now, I'm not going to wait for the highs at 20,000 to be taken out to say this is a long-term move. But that is what is necessary to be sure that this is the beginning of a long-term move and not the end of an intermediate term move. So here we are at 9,500, 50% lower than we were a year and a half ago, and working our way effectively through overhead resistance at 6,000, at 7,500, at 8,500, at 9,000, at 9,400, and we've just taken all of those out. There are some levels above us that need to be taken out. There are some very strong long-term signals that are beginning to say that we have come way too far too fast, and therefore a significant correction is due. And we won't go into what those are right now, but we'll do a whole show on them because I'd like to get Willie Wu and Murad and David Poole on to go over an analysis of their techniques that are so effective on Bitcoin. And I know that they are flashing tremendous warning signals, as are a number of other things. But that's a different question. The question right now is, instead of saying this is such and such because we don't know, you take it a day at a time, a week at a time, a month at a time. I would never buy the 3,000 bottom. I was happy to buy the 6,000 breakthrough, but I was also happy to take profits after a reasonable return. And that reasonable return is now up close to $3,000 a Bitcoin on the last half that we have in a very short period of time. Now, that's not a 10,000% gain, which a lot of people were able to get in the early years. And it's not a gain of 20x like we saw from 1,000 to 20,000. It is a gain from the bottom of 300%. And the potential, once we move into a long-term category and acceptance and adoption becomes much, much greater, is, as far as I'm concerned, in the $5 million to $10 million range. But I've got serious doubts that we are at a point that we can make that call because of all these other macro things that are going on, particularly gold. I think it's going to be very difficult for, if this is the beginning of a new bull market. Remember, we have been in an 8-year bear market in gold. What we are playing around with now is an intermediate term bullish move. It's nowhere near going into a long-term bullish move at this point. You have to go start with the short term, move to the intermediate, and finally you get the long. You can take positions in the short and then add to them in the intermediate, but you don't want to put investment dollars in until the long term is established.
All right, I guess we'll just have to wait and see what will be required for you to consider the long-term trend being established. It sounds like there isn't any real concrete answer that you have right now. We'll have to, as usual, wait and see how things develop. So I can just show real quickly the what I'll be keeping an eye on, and seeing the Ichimoku cloud is very much agreeing with what Tyler is saying, seeing that the price is still in this cloud, and seeing how the cloud will adjust where the price will break through. The price is constantly changing based on where we are, what week it is, that this is where it will be ready to signal a long-term trend, is when this price closes above the cloud. We've got the bullish Kumo twist, and we've got the bullish TK cross. So that is 2 out of the 3 that we need. And the third is a close above this cloud. If that happens, then I would be considering this a long-term, a bullish trend. And until that happens, I would be.
What price does that occur?
If it is this week or next week, it'll be 10,174. And after that, it will start coming down. If it gets through here, and then it can even throw all the way back to retest down in this area after getting through. So basically, it doesn't have to break through the upside. It could even just come straight out the sideways end. So if price just continues to support up here for about another month, we could just break out of it sideways. And even if we don't go any higher, this could end up signaling a full bullish trend, depending on how long we stay at these prices. So if the price does breach the cloud with a bullish Kumo twist and a bullish TK cross, that is my final indicator of what is a long-term trend. That would, to me, be saying this is moved from a medium to a long-term trend. So I don't quite have the experience that Tyler does, not even close. I don't really have the feel for the markets that he does, so I can't be as subjective in my viewpoints. And that's where I find this to be very powerful, because it's very, very objective. It's very clear. You're either inside the cloud or you're not. And when that occurs, you look to see what color the cloud is all the way through and where these are crossed. So that is how I will personally be identifying the long-term trend. And until that all of that happens, I am still in full agreement with Tyler that this is just a medium-term move that still needs to prove itself before establishing a long-term trend. And with that, I think we have covered everything we wanted to go over, maybe and then some.
Terrific.
Well,
that's great. I always learn a lot on these on these give and takes. And what better time to do it than right now? We will come back again tomorrow, obviously, and see how the week is closing out. I'll let you know what we have done with our discretionary accounts, because there's a lot of things going on here. And thank you very much, Socrates. Great job as always.
My pleasure. Thank you very much for having me. These markets will be giving us plenty to talk about over the coming weeks, and that is sure very exciting for me.
Great. Very good. Thanks, everybody.
We'll see you tomorrow.